Hey traders, checking in on the stock market today. So over the weekend, we saw significant cryptocurrency consolidation. And to start this week, we've got the stock market pulling back, both SPY, QQQ, and some individual names here. The question is, do we see fear as a result, or are we just scouting daily higher lows and new all-time highs further on down the week? Let's look at the details. So here we got SPY pulling back. This is the most notable pullback on the daily time frame for SPY in many weeks, almost a month. And the last time we broke the pattern of a higher low every day, it was by 20-some cents. And now we broke it by a couple dollars. So what I am watching as far as a short-term support is that low of the last red day here. And that was down at 410.87. So again, simple statement, if then. If 410.87 is holding as support, then the bulls are in complete control. So I will continue to be viewing this market as a buy the dip opportunity for names that are in daily uptrends, as long as we are not seeing our two criteria for fear: increasing bear volume, all of our major sectors at the low of the day at the same time. If those things are not happening, I'm watching for daily higher lows on the names that have been strong over the last month. So we'll be watching for that on SPY. Hourly trend change back to the bulls needed to confirm a daily higher low has been established. QQQ is the same story. The difference is the QQQ support is closer nearby here, 335.67. Again, daily consolidation underway. Daily EMA 12 is closer in play. If 335.67 support holds, then the bulls keep their complete control. That is the short-term level. I did shift today a little bit. I've been talking about how I'm in SQQQ bearish position as a hedge against my long-term exposure. And right now my holdings have shifted for the first time in a while, where I am slightly bearish favored. And that's because of exiting some long positions. So that will remain the case, and I will lighten back up again once the bulls regain the hourly uptrend. The bounce at the end of the day into the afternoon on QQQ, decent. But again, until we see an hourly higher low and higher high, I'm going to keep a little bit of a bearish lean to see what this daily consolidation looks like. Also keeping in mind that Netflix starts the tech sector earnings tomorrow, and then next week is when the rest of the heavy hitters give their earnings. IWM, still range bound, pulling back today, but again, watching these two levels as the most important levels for me. We've been trading within these levels for 13 days in a row or so. 218.83 and resistance 226.69. We're $5 below resistance and $3 above support. If we get the bear break, a weekly lower high is set, and we're then watching, can the bulls form a weekly higher low, or do we confirm a head and shoulders pattern? If we're going to confirm a head and shoulders, it will have to be on notable increasing bear volume to just drop straight to a lower low under this double bottom at 208. If we break bull, then it shows us rotation into some smaller caps. But for now, range bound sideways. Financial sector, slow grind up continues. Again, clear line in the sand level. If 34.78 is holding, then the bulls have complete control. So we are seeing bull breaks lack follow through, but we're also seeing a higher low after every time a bull break lacks follow through, which keeps the bulls strong. So we'll be watching 34.78 support closely, and the all-time high 35.53 is resistance now that we've made our way through the majority of the financial sector earnings. Healthcare. So healthcare didn't do a ton today, but look at how it closed. The one thing healthcare did for me is had me say, okay, we're not seeing fear. Healthcare is holding on just fine. We're up at the all-time high. So we have XLV at 121.62. Higher low every day the last handful of days. Plenty of space for a daily higher low next time we consolidate. Bulls overall, just fine. So we had some weakness in QQQ, some weakness in XLF, but no weakness in XLV, which keeps SPY bulls happy. Biotech sector, weak as well. And a move is imminent here. Watch for the volume spike and the volatility to increase. Bulls have a double bottom at 126. That level is in play. We came 1% away from that support today. We would have to change the hourly trend back to the bulls tomorrow to hold 126 again. There's a potential play off that support level, but cautious of a bear break. I personally am not going to be making a play off of support because the bulls have done nothing. The bears are proving control time and time again. If we see a setup, if the bulls change the hourly trend back in their favor, then I'll get interested if we can see a bull break of 135.42. If we don't break 135.42, the bears keep complete control. And it's absolutely possible that we break 126 and see another leg down. At that point, I'd be watching for a bear break and a lack of follow through, but we'll take it one step at a time. 126 key support in play tomorrow. Semiconductors, we were watching the potential of a bull flag. I believe towards the end of next week, I started talking about how, well, we're not really positioned well because we're pulling back and QQQ is still very strong. So any broader market consolidation, and we're likely to negate that potential bull flag, which is what happened with the big red day today with QQQ's drop. So 244.88 gap did fill, and now we need to find clarity. So I zoom out, I look at the weekly, and I can see that we double topped at the all-time high, and now we're looking for a weekly higher low, anything above 22.41. So we're still in an uptrend. It's just not the same bull flag possibility that we had just last week. Clear bear break, an increase in bear volume today. Next time the bulls change the hourly trend back in their favor, we will scout a daily lower high to be the result of this bounce. Hourly downtrend will be our short-term guide. TAN, just like XBI, is grinding support. 81.07 and 80.80 are in play. We are 2% away from those support levels. And if we were going to hold them, we would need to see the bulls get over 87.57. So bears in complete control, support levels approaching, and it's up to the bulls for a last-ditch effort to try and save this support and remain in the tightening range. Otherwise, we can absolutely see another leg down. Key supports in play. MSOS, bear break of 38.80. Bears keeping control here. They'll get my attention if we can see a couple green days as a result of a bear break with a lack of follow-through. But again, it's another sector. XBI, TAN, MSOS, bulls are showing us nothing. Next time we bounce on MSOS, I'm viewing anything under 44.68 as a daily lower high. The daily RSI is close to approaching oversold again. And honestly, at this point, I'm hoping the broader market pulls back more significantly because these names on the OTC, these MSOs, get really extended to the downside. And it's a solid opportunity when it is that extended. And I'm hoping that the broader market, because I'm cash, I'm hoping that the broader market can push things to extremes to get me interested in some positions. Otherwise, patiently waiting for bulls to show me something on the daily time frame. The VIX, bull break today, inside bars to end last week. Something to note on the VIX, the daily RSI doesn't get oversold. Look back 5, 6, 7, 8 years, we bounce in the low 30s. And if you look back the last 3 years, we bounced from 34 or 35 at the low point. And just to end last week, this RSI was 38. So we know to be watching for it. Granted, it's not a convincing bounce at all. Why is there a big upper wick? Because we did not see fear in the broader market today. We did not see all of our major sectors at the lows. So it's a bounce that's cooling off RSI, but bigger picture, it's not doing anything to shift the momentum on the VIX. We're watching for an hourly high or low, but a wide range on this hourly chart means keep an eye out for an equilibrium. The dollar, big flush. We went straight from all bulls, ran straight into the monthly EMA 12 resistance, and it's been all bears ever since. 4 hour, no bounce today. On any bounce, we're looking for a 4 hour lower high, and the bears are keeping their complete control. That is a lot of weakness. We've lost the weekly high or low on the dollar. So we're looking for a 4 hour lower high, then we'll look for a daily lower high, then we'll look for a weekly lower high on any bounce follow through. The one thing is that gold and silver consolidated today, and we're actually red. And for the metals to be red when the dollar is that red definitely stands out to me. That being said, anything above 17.23 is a daily high or low on gold, and anything above 24.68 is a daily high or low on silver. What bulls want to see, and myself being one of them with my IRA positions, I want to see these EMA supports hold a back test to keep these daily high or lows strong. Lose them, and it'll be a little bit of a red flag, keeping in mind that some names, silver is scouting a weekly lower high, and gold is scouting a monthly lower high. But the daily uptrend is what matters most to me for the rest of April. Miners, double top, failed to break the high of Friday by 3 pennies on GDX into daily consolidation. Again, tons of space for a daily higher low to form. There's no red flags on this pullback at this point, and the bulls just want to maintain the EMA 12 support to keep this consolidation healthy and to stay within striking distance of continuation. Oil, we're switching over to the futures contract for June. CLM 2021. Potential little daily bull flag here. Plenty of space for a daily higher low on a pullback. And after resistance of 63.94, I'm looking up at 66.15 and 67.29. The question we have for the next week or two is oil going to set a weekly lower high compared to 67.29 or head straight into continuation? Natural gas slow grind continues. Next resistance is 2766. Weekly bear flag confirmed with a lack of follow through. And now the bulls are trying to shape up a monthly higher low. Back tests and holds of the EMA supports. We will need a clear daily trend change eventually, with multiple days of a pullback, set the higher low, and then see continuation. But for now, it's just a 4-hour uptrend and a slow grind up. So I didn't do a whole lot trading today. We'll do a trade review on GME. So GME, the setup is weekly equilibrium watch. High of the massive breakout, low of the massive dump, lower high, and the bulls are scouting a higher low. We found support at 116.90, and now we're trying to set another level and hold these EMA 12, this EMA 12, 132. So what do I want to see first thing? A break of 174, the high of last week. That's what matters most to me. Gap up open, shaping up this morning with news that CEO is stepping down. So I see a scenario, okay, gap up open, maybe the bulls can put some pressure on shorts. Because if we gap up open and break 174 first thing, anybody that went short in the last 6 days is underwater. So I made an initial entry pre-market at in the 166s. And to start the morning, we rejected from 174 first thing and pulled back fairly hard. I did not like that. So I exited on a new low of the day under 166, and it ended up being a 5% day loser loss. So cut it. Bulls didn't show me anything. But from there, I knew I was just looking for an hourly higher low. Anything above the low or end of day Friday. So I didn't give up on the bulls. I gave them one more chance. And I then was watching for a 5-minute trend change back to the bulls to indicate the hourly higher low had been set. So I saw the low of the day, saw a little bounce here, and here was my last attempt. And I entered with twice as many shares because when I'm entering pre-market, my stop level was 151, the low of Friday. That's $15 away. I have to use a real small position size. So I stopped out with a tiny loss. I re-entered here with twice the position size. Why? Because I had a clear level. If 164 breaks, that's 0 for 2 and I'm done with GME for the day. If we hold it and change the 5-minute trend, there's potential for the hourly higher low to be set. So I entered twice the position size at low 167s. Looked great. Bull break of the high of the day, 172. Bull break of the double top, high of pre-market and high of last week, 174. Instantly gave me red flags. The first red flag, 1 minute bear volume on that break. Highest volume candle was the 1 minute candle that closed near its low. From there, 1 minute higher low, no biggie. Failed to break resistance, further consolidation. So I'm starting to get red flags, and what I do is I say, okay, I'm exiting half of my position if we lose the 2-minute uptrend. We set a 2-minute higher low at 171.51, didn't break the high of the day, I stop out half of my position at 171. So at that point in time, that's a $4 gain, and that puts break even on the second half of my position at 163. Gave the bulls one more chance. Bouncing here from 166.50, I put my stop under 166, and I stopped out. So in the end, that is a small win. I had a $1 loss on a half position, I had a $4 gain on a half position, and then a $1 loss on a half position. So I had a $2 gain. In the end, that's taco money, but I love having a failed trade and making money on it. because that shows me I'm recognizing the red flags. I'm doing a good job of keeping my risk limited. An earlier version of me years ago would have held this to a new low of the day and would have gone from a solid green trade to a solid red trade. But now I'm recognizing red flags and cutting it. Bulls have to earn my money, and if you're not earning it, I'm taking my money back. So from here, I'm not giving up on the GME bulls, but today was a big failure. No two ways about it. And we're going to have to see a convincing break of 175 this week if that's going to change. Bears win today. Another trade I didn't take, Tesla. So Tesla had bearish news over the weekend of the crash, and we dumped into oversold conditions this morning. 5-minute bear flag. Things got real beat up on the 5 and 15-minute time frame. And as I was live streaming this morning, I was saying, I'm not sure why I'm not interested in this Tesla bounce, but I'm not. And in hindsight, it probably was because it was news that was the reason for the drop, and also a lack of support nearby. Once 700 broke, I would have entered a bounce if 700 broke on a straight drop down here. But as soon as you give me that bear flag, you cool things off, you set a resistance level, you're not a waterfall drop anymore. I'm no longer interested in the break of 700 for a bounce play. So the lack of support, after 700, we don't have anything nearby. So news reaction and lack of support is why I didn't make this trade. But the lesson for me is, just because you're not interested in entering into weakness, don't give up on the trade. Because I gave up, I said, well, I'm just not going to trade Tesla today. But it then gave us a very clear 2-minute setup that I could have patiently waited for and gotten a solid win out of. And it was just this setup here with the low of the day, high of the initial bounce. Maybe it was the 5-minute where it was most clear. Yeah, 5-minute was good. So low of the day, high of the initial bounce, 704. Higher low, failed to break 704. And again, what that does when you have that clear resistance, it just means everybody's watching the same level. So shorts are going to stop out when the double top breaks, and longs are going to buy when the double top breaks. It's like shaking up a soda can when you just get tighter and tighter. So we rejected, held the 5-minute high or low, and then there's your bull break, 703.75, 704.56 break. And just like that, you get a very quick 1.5% of follow through in 15 minutes. So that would have been enough for a day maker of a trade in 15 minutes if I had just bought a 705 break. So the hindsight for me is, it's fine to pass on a trade because it doesn't meet your criteria and the trade doesn't come to you and it's not an ideal setup, but doesn't mean write it off for the day. All right, do good things. Keep an eye on the volume. Keep an eye on our major sectors. Is it healthy daily consolidation? For now it is. And we'll be watching for daily higher lows on names that have run significantly. Other than that, we've got a lot of names testing key supports. The weaker sectors, XBI, MSO, S, TAN. NIO did stand out today with a bullish correlation to QQQ. So I'm going to be watching NIO closely tomorrow. Great volatility in both directions. Huge drop. Huge bounce. One day of a bullish correlation is not enough. But if QQQ is just going to give us a daily high or low and hold that level that I highlighted as our line in the sand from last Wednesday, then NIO is positioned well to start benefiting from a bullish correlation with QQQ. One day is not enough. It's enough to get me to pay attention. If it happens again tomorrow and NIO stands out bullish compared to QQQ, it's going to be a lot more convincing for this double bottom at 34 and the tightening 2-day range, which continues to tighten. See you tomorrow.